I've seen a lot of businesses go into trouble because of this withholding tax, WET.
Okay.
You see, when you render service or goods to someone, you are to withhold their income.
You have to
withhold their income,
Okay.
part of it,
Okay.
and pay to GRE. So it brings us back to the question
Okay.
of who pays the tax.
Who pays the tax?
Everybody is supposed to pay tax.
Okay.
So all the earnings you'll be making, the profits, what else? So profit and all those things that you gain directly as income.
Okay.
Then you pay tax on it.
Oh, okay.
Tax has two main components.
Okay.
Or some will say types, or no matter how you define it.
Okay.
Taxation in layman's language.
Okay.
It's levy.
Okay.
That is imposed on the citizens of a country.
Okay.
By law. Then we have to call also the gift tax.
Oh, okay. It also falls under the direct.
Yes.
Oh, okay.
If anybody give you gifts, you have to pay tax.
Like seriously?
Yes. But if it is your girlfriend giving to boyfriend, you have to pay.
Hey! Like seriously?
So what the gift? You have a girlfriend?
No. But what I mean is that means all those people that falls in this boyfriend girlfriend relationship category, we are owing the government power.
But if you classify them as gift, you have to. The tax must be paid on them.
Like seriously?
For our viewers, please know that the tax laws are evolving.
Okay.
So even some of the presentations I made today,
they can change.
They can change.
Oh, okay.
So rapid. So maybe if you are watching at another date, some of the things I mentioned are not applicable. Know that it has changed, but they do change.
Okay.
Frequently. Yes.
Oh, okay. So it is the duty of your accountant and you, the business owner, to be abreast with tax. The current tax.
Exactly.
Okay. Welcome to today's episode. Today's topic is going to be about something that most of us don't like, especially we Ghanaians. It's about taxation. I choose to treat this topic as early as possible in 2026 because as we record this video is on the 2nd January 2026. We've been talking about investment, we've been talking about business startups, but there's one core aspect of the business which most Ghanaians business people ignore, which is taxation. So today that is the topic on the table. So you meet Albert. He's our resource person. He's a certified chartered an accountant. I'll give him the room to introduce himself better. We've been talking back and forth. Let's do something. But today I managed to capture him on this on the 2nd January. So he's an tax expert. He's very good in accounting. If you need any accounting services, consultancy, please, I'll leave my number. You call us and let us know which type of accounting services that you want. So tell us your name.
I'm Albert. Albert Ekufu. Ekufu. Yes.
Wow.
It's spelled fancy, but it's the same name in a way. Ekufu.
Is it not the same as Akufu?
I know the name Ekufu.
Okay.
Ekufu. That means you are talking about somebody from the Kuapem area.
Oh, okay.
It's the same name, but when you say Ekufu, it's the same name, but you are talking about somebody from the Fanti area.
Oh, okay. So that is Elmina,
Elmina, all the Fanti land, the coastal area.
Oh, okay. That's good. That's good.
Ekufu Albert, but you can simply just say Albert Ekufu, and it's nice to go.
Okay, that's good. Tell us about your accounting background, your experts in the accounting aspect. A little brief.
I must say I'm a chartered accountant now.
Okay.
I qualified since 2010.
Since 2010.
So it's about 15 years now.
Wow.
When a member of the Institute of Chartered Accountants Ghana.
Okay.
So not a member, actually a fellow as well. You know, we have categories of membership.
Oh, okay.
So a fellow is someone who has been qualified for long over 10 years.
Oh, okay.
And has been supporting the advancement of accounting and accounting education.
Oh, okay.
In the country.
Okay.
So I'm a fellow with the Institute of Chartered Accountants Ghana.
That's great.
And we've been in the profession for quite some time. Even before we qualified to become members, we did accounting all throughout from the secondary school days.
Wow.
Aha.
Then somebody will locally say that then you have chew baba.
So from the secondary school, we did those times. We did accounting. I did accounting at the O level. When we were doing the GCE O level.
Oh, okay.
Then I did accounting at the advanced level GCE.
Okay.
And then I now branched into the professional lane, writing the ICA Ghana qualifying exam. We call it qualifying examinations.
Okay.
So I wrote the part 1, the part 2, the part 3, part 4.
Wow.
Before you qualify. So that has been whilst also practicing at the same time.
At the same time.
Yes. So that has been the journey.
So meaning that what you are coming to teach us today is not something that you have chewed just like book knowledge. It's something that you have practiced over the years.
Oh, sure. It is more practical. And I even don't like the word you use, teach. No, this forum, we are not teaching.
Teaching, okay. Oh, so it's part of education.
Yes, so we are going to discuss. So I'll call it more of a discussion. Or for people to be aware of the tax issues.
Okay.
Not to go, if you say teach, means you are going to the details, the theories and all those things.
Okay, we have levels of teaching. So
anyway.
Okay, so let's come to the topic.
Yes.
This channel is actually built to educate about business startups,
that's nice.
Investments, and you can never take tax away from these areas.
At all.
So it is something that I see that it is very important. Yes. Business owners, individuals know who are interested in going to business to know about the topic about taxation.
For our viewers, please know that the tax laws are evolving.
Okay.
So even some of the presentations I made today,
they can change.
They can change.
Oh, okay.
So rapid. So maybe if you are watching at another date, some of the things I mentioned are not applicable. Know that it has changed, but they do change.
Okay.
Frequently. Yes.
Oh, okay. So it is the duty of your accountant and you, the business owner, to be abreast with tax.
The current
tax.
Exactly. Okay. So I want to sound this disclaimer before someone says that we've put out wrong information, blah, blah, blah.
Oh, okay.
And also, they shouldn't take any decision based on what we said.
Okay.
It's a disclaimer.
It's a disclaimer, yes.
If you want professional advice for taking decision, they should contact you.
Okay.
Then we sit and talk on that one.
Oh, okay. So like I said, if you need consultancy services as far as tax is concerned, please let us know. We provide you those services before professionally.
Exactly.
Yeah. This is education, more of an education and information. We are passing out this for business and individuals to know about tax. So if you really want to apply it, please consult a professional to assist you in your dealings.
Exactly.
Yes. So when we say taxation, what does it mean? Or when we say tax?
Simply put, in layman's language, we say taxation in layman's language. It's levy that is imposed on the citizens of a country.
Okay.
By law.
It is imposed.
Yes.
Whether you like it or not.
You have to. Yeah, you have to comply.
Okay.
So it's by law.
Okay.
And the purpose of that imposition is to help the government generate revenue to also service us.
Oh, okay.
You understand?
Okay.
So through the tax, government makes money, and then they use the money to provide general goods and services for the same citizens.
Oh, okay. So it's not like when they take the tax, they spend it on themselves.
Not at all.
Okay.
Not at all. I know it will be controversial, but the basic purpose of taxation is that they take the money, then they use it to provide us with certain goods and services that we, the citizens, cannot afford to provide on our own.
Example?
For example, we use roads.
Okay.
You alone cannot construct a road.
Okay.
You understand?
Okay.
You alone cannot. And even if you can,
the cost involved.
The cost involved. And imagine the obstacles that you encounter.
Yes.
Because the land that you want to construct the road is not for you. The land belongs to different people. So how are you going to organize yourself to have a discussion with all these people to get the road?
Okay.
And for even for yourself, for what purpose?
Okay.
But the government has the power to now deal with everybody to get a road done.
Okay.
Example is the service they provide for us, the security we enjoy.
Okay.
The police, who pays them? You don't pay them.
Okay.
The police, the uniform, their
clothing,
the weapons they are carrying. Are you the one who bought it for them? No.
The hospitals.
Okay. Yes, you say maybe you pay something, but the thing you pay is peanut just for.
But even without Christ, we are still struggling with it.
Exactly. Those one go for basic services in the hospitals, like cleaning, and so that when you go there, you not get sick. That's the small fee you pay.
Okay.
But then who builds the hospital? Is the government.
So I would say, in a layman's simple understanding, taxation is like a dues we pay.
Let's call it like that. So you pay a small dues. So that the government can provide you, all of us, that services or goods that we individually cannot afford.
Oh, okay.
So it's dues, but it is backed by law.
Okay.
Because you know, if you say due, people voluntarily may not want to pay or may not pay.
Okay.
But once it's backed by law, then it becomes enforceable on everybody within the country.
Though the focus of today's topic is more related to business establishment, but you can generalize it for us to understand. So what are the types of taxes as far as business or individual is concerned?
All right, so let's start with the broad framework so that we can now narrow them down to the specifics.
Okay.
Tax has two main components, or some will say types, or no matter how you define it.
Okay.
We have what we call the direct taxes and the indirect taxes.
Direct and indirect.
Exactly.
Okay.
So direct taxes are those taxes that you pay from your income. Directly, you know, this is the income you had.
Okay.
This is the tax you are paying out of
whether
it.
Business, salary, or whatever.
Or whatever. And that one, you see, when you are paying, you feel it.
You feel it. Especially on your bonus. Yes, you feel it.
You feel it. But the bonus tax is rather low.
Really?
Yes, the rate for bonus tax is rather low.
Hey,
so
then we need to look into
it. It means that your bonus is huge.
No. It's not huge, but sometimes you see. Sometimes especially when you're a salary worker, they add the bonus to your salary and they strike the percentage. Before I realize, it's like half of the bonus. It's like half of your salary.
I get.
So because the salary plus bonus, they will do the calculation on the salary plus the bonus. When they lump sum it,
I hope you're not confusing allowances with bonus. But we'll get there. There's a difference.
Yes, there's a difference. If there are differences, we need to understand.
If you say that they add your that kind of amount to your salary before working out the tax, then I can presume from what I know that one is rather allowance.
Allowance.
Yes.
Oh, okay.
Because allowances you are not there yet, but you are eating you are drinking.
Because it's very important. I'm sure the individual will be interested in that area.
Yes.
The business.
Because the tax for bonus is quite small, very very small.
Really.
The rate is very small.
Okay. So we were talking about the
direct. So the direct taxes are those you pay directly from your income.
Okay.
Whether you are a company, so if you are an individual, the tax you pay that is based on the amount of money you earn. Your salary, basically your salary or your earnings.
Okay.
And then if you have a registered business as an individual, that tax you also pay when the business makes profit. Those are the direct taxes. So you see, that one you are paying direct. You are taking hard cash to pay, and you
are feeling it.
Exactly.
Good. Okay.
Then we have the indirect tax.
Okay.
So the indirect taxes are those taxes you pay, but you don't feel it. You pay, but the feeling of the payment is not as immediate as the direct.
Okay.
You know, we are not going to too much of a technicality. So the taxes that are put on goods and services.
Oh, okay.
So that as you are buying those goods,
like drinks,
rice,
all
and,
those things.
you are paying for them.
Okay.
But you know, you are not paying directly like you pay the
So
other
assuming like somebody who is importing items from outside, those taxes you pay, importing whether food or whether appliances, those are the indirect.
Those are some of the indirect.
Oh, okay.
And the basic indirect tax we all know is the what we call the VAT.
Oh, okay. Okay. The basic one.
That is what commonly we all do.
Say VAT. Okay.
So the VAT we all
that
do.
is value added tax.
Okay. So they are form of indirect, and they are usually based on your consumption expenditure.
Okay.
So the more you consume certain goods and certain items, as your income goes up, you know, you want to live that luxurious lifestyle, you'll be paying more of it.
Okay.
But we, those who are the farmers and all, because we don't consume that kind of lifestyle, we don't pay that.
We don't pay that. Oh, okay.
So that's the basic difference.
Oh, okay.
So we have the direct and then the indirect.
Oh, okay.
And then they all come with different rules of different rules of engagement.
Okay.
The rules under the direct taxes are a bit different.
Okay.
And the rules under the indirect are also a bit different.
Okay.
But so they are all there for people to know.
Okay. Okay. So if we should break down the direct, some of the what goes into the direct, though you have explained it, but is there any structure that as far as the individual or the business owner is concerned?
Oh, so the direct, like I mentioned, so they are the taxes you pay straight away from your income. So those ones, they are also what we call usually called the income tax.
Okay.
So income tax.
Income tax. Okay.
So all the earnings you'll be making, the profits. What else? So profit and all those things that you gain directly as income.
Okay.
Then you pay tax on it.
Oh, okay.
And under this, you can have what we call
so the seller or a business owner, we all fall under this.
Everyone. Even individuals.
Oh, okay.
Everybody
falls under.
Yes.
Okay.
But of course there are rules, like I said, rules of engagement.
Okay.
So the law allows for exemption of certain level of income.
Okay.
It also allows for exemption of certain kind of people.
Okay.
It also allows of certain kind of items.
Okay.
Produced, so that if you are dealing in those, for example, if your income, I'll have to check the current one. Maybe if your income is not up to 2 something, you are not to pay tax.
Is it 200 Ghana or
260? No, 260 Ghana cedis.
260. Like that is a profit.
No, yes, for the individual, not company. Okay. We'll come to the breakdown of the others.
Okay.
But we are talking about the individual.
Oh, okay.
So we have what we call the income tax. Then we have what we call also the gift tax.
Oh, okay. It also falls under the direct.
Yes.
Oh, okay.
If anybody give you gifts, you have to pay tax.
Like seriously?
Yes. Of course, that's one to their rules of engagement. For example, if it's between your spouses, that one there's exemption. I think also if it's also between mother and that blood relation, there's also exemption. But if it is your girlfriend giving to boyfriend, you have to pay.
Like seriously?
So what the gift? You have a girlfriend?
No. But what I mean is that means all those people that falls in this boyfriend girlfriend relationship category, we are owing the government power.
But if you classify them as gift, you have to, the tax must be paid on them.
Like seriously?
And then we have the rent tax. The rent tax also. So when you rent out your property, there's a tax you have to pay on it.
Oh, really?
Because there is income for you.
It's income.
The rent is income, so you have to pay tax on it.
Whether you're a registered business or not a registered business.
You have to pay. Once you're a citizen of Ghana, you are bound by the law to pay tax. And you are collecting rent, you have to pay.
Okay. Then
we have also investment income.
Investment income.
So, for example, if you have invested somewhere, and then you are getting returns.
Wow.
You have to.
So, example like treasure bill, you have to pay tax on it.
No, treasure bill usually you don't pay tax on it because, like I said, the rules are also different for each area.
Okay.
For example, even under the investment, there's a part if they are paying to an individual, they don't deduct withholding tax and all those things. So the rules are there plenty. But, let's focus on what is more relevant to our people for now. As we progress, now we can go to the specifics. Maybe in the series we can now look at the specifics and the complications of each of these areas. So these are the direct. All these falls under the direct taxes. And they have different rules that governs them.
I can just imagine the gift tax.
Right. so the income tax, under it we have what we call the employment income. So that's when you are working for someone, they pay you. That's employment income.
So that one the employer pays that pay that tax, or the individual pays.
No, choose your words well. The employer takes it from your salary and pays on your behalf.
So that's the employment income tax.
Exactly. And that's what we usually call the PAYE. So that's what we call the so we'll go into more of the income tax. This ones I just mentioned it. For us to know that something like this also exists. So any income that you get.
So now the employee income tax. How about the business owner? Does he also pay income tax? Since you are taking that of the employer's own to go and pay. How about at the end of the year, all the profit that the business has made, do they also fall under?
Yes, they fall under income tax.
They also fall under.
Yes, so you pay tax based on the profit you made.
Wow.
And the good side of it is, if you didn't make any profit, you don't pay any tax.
But that of the employees only,
there is constant. But we are paying them their salary. They are earning the income. So once they are earning the income, it is even taken before the rest of the money is given. But it's not, it is it's difficult when paying. But imagine if you don't pay how does the government
get money?
Exactly.
Okay. I don't want to go to the aspect that how the government takes all this income. That's not the topic for today.
Sure.
The topic is actually to benefit the individual.
Our people, exactly.
So what falls under the indirect?
So the indirect is, like I mentioned, is the common one is what we call the VAT. Then there are all the others. We have the customs, like the import duties and all the. So the import, basically these are it. The import duties.
Like buying, when you go and buy things from the mall, all those VATs on it.
No, they are all part of VAT.
They are all part of VAT.
Then another indirect can also be. So basically these are them. They are not as plenty as the. Basically you have the value added tax and then the excise duties, custom duties. Those ones.
So all the, in short, clearing costs.
No, if you say clearing costs, it's quite broad and big. So let's say just the duties. So they are indirect. So they fall under that. But the most common one that affects all of us is the VAT.
Is the VAT.
The value added tax.
Among both, whether direct or indirect, which type of, let's use an example. Let's start from the lowest level. The Indomie seller, the person doing Indomie. To sell Indomie, like these tabletop businesses, what kind of tax applies to them? Are they supposed to pay tax?
So it brings us back to the question of who pays the tax.
Who pays the tax?
Everybody is supposed to pay tax. So the Indomie seller, once he's an individual living in the country, whether he has a registered business or not, has to pay tax.
Has to pay tax.
Has to. So as an individual, once you are working, earning income, you have to pay tax.
So are you the ones to go to the office to go and pay, or they have to come and take it from you?
By law, you have to make effort at paying. We'll come to compliance. By law, you have to make the effort
To go and pay.
To go and pay. But who forces you to use the road? Who forces you to go to the hospital?
Okay.
No, you see, we are just making some simple analogies to also show our responsibility as citizens towards what we have to contribute for the government to serve us better. Although we know that paying taxes is difficult, but we should just have in mind that it's also good to pay. So you have to go. Except that, within the tax system, there are also rules of engagement. So there are rules of, so for example, if the cost of collecting the tax is higher than the tax that they will get, they don't see the need to. Exactly. We have canons of a good tax system, and one is efficiency, cost, and some other. There are things.
So the government will weigh the cost of me sending my people out to go and
GRA.
GRA
is the tax collecting arm of the government. So GRA will now weigh if we should go to the Indomie seller. Imagine the transport cost will care. Your people, you have to give them the allowance. Even the Indomie seller probably sells mostly at night. So the people that are going must be catered for as well. How much money are they? Excuse my language. If you compare the money they will get in tax from the Indomie seller to the cost, well, then sometimes they just feel there's no need. But you, as a good citizen, you can also go ahead to make your small payment. So usually you can also go ahead and pay, and that is different from what you pay to the assemblies and those things. Those are different. Oh yes.
So what we pay to the assembly, what kind?
Those are what we call the assembly, the rates, and then all those things. It's small tool for the assembly to service us. But they don't fall to the main categories of the taxes we are talking about.
Wow. So in a layman's understanding, how do you calculate tax, especially those people who fall in this business category, the Indomie seller, the carpenters, the plumbers, like these small scale businesses?
You see, there are different.
Maybe people are not paying because they do not understand as long as I render service, I'm supposed to pay.
Yes. No, so once, like I said earlier, once you are individual, a person in Ghana, you have to pay your tax. You understand?
Yes.
Now, in paying your tax, what you do is usually you calculate all the revenue you generated,
all the revenue
you made, the income you made. So, for example, the carpenter you are talking about, as an example, the carpenter. So you calculate all the monies you made, and let's assume
from January
to December. If you are able to even keep that record.
Let's make it by month, from 1st to 30th.
And then you made let's say 3,000 cedis.
The whole month.
You look at, so this is how much you made. Like I said earlier, the individual taxation falls under what we call the graduated tax system. So their rates are not fixed like companies.
They are not fixed
like companies. Their rates spread from 0 up to, I think, 35%. So depending on where your income falls, there's a tax you pay on that. So, for example, this 3,000 that you are talking about for the carpenter, based on the 2024 tax rate. Let me see the 2024, because the rates they change every year, honestly.
They change. They are not static.
No. It once depends on the policy of government. If government says that they want to make things easier for people, like they reduce the COVID, they limited the COVID and all those things, they can also make movement in the tax bracket.
Oh, okay.
So, for example, let me check the 2024 tax. So, pay as you earn. For all the tax information, people can go to the GRA website.
GRA website.
Yes.
Oh, okay.
So, let's write it here. So, for 2024, so this is how the graduation is done.
Okay.
Okay, so we have the first 490, it is 0%.
So that's 490 Ghana cedis.
You don't pay tax.
You don't pay tax. Oh, okay.
Then the next 110, next 110, you pay 5%.
Which one is the
I will
next?
explain.
Okay.
Then the next 130, because these days we use the Excel template. We don't keep the figures in our head. First,
okay.
You have to chew all this, but now they have Excel
template.
You just input your workers' pay and then it just compute the tax you have to pay. That's all.
Okay.
But of course, you should also understand it. So and then the next 3166, 8.7 crores included is 17.5%.
Oh, okay.
Then we have the next 16,000, 25%.
Oh, okay.
Then next 30,520.
Okay.
Is 30%. Then when it exceeds 50,416.
Okay.
It is 35%.
So this is the cutoff point.
So these are and we call it the tax bracket.
Oh, okay.
For personal income tax.
Personal income
tax. It's the same as the individual income tax.
Okay. Okay.
So that's for the person,
okay,
not for the corporate.
Not for the corporate.
So the way this one is calculated, so for example, the carpenter you were mentioning, this 3,000.
Or the shop owner.
Or the shop owner, if it is personal.
So this category of business falls under sole proprietor.
Sole proprietor.
Okay.
So that's why it's personal.
Ventures, enterprise.
Once you are not registered as a company.
As a limited liability.
It's not part.
Okay.
They have the different rates.
So all business under sole proprietorship.
Exactly.
They falls under
this one.
This tax
and then
bracket.
even employment income. They are all personal income tax.
Oh, okay.
Bracket.
Okay. Okay.
You get it.
I get it. This is good.
So they all, for once it is not a registered company.
If it's not a registered company, because sole proprietor you can register it.
So you've registered it by a sole proprietor.
Yes.
It's not a company. There are different. The company registration. Let's say the business registrations aspect are also different rules.
Oh, okay.
You can register as a sole proprietor. That one is when you the person. You see, still the person.
You are still a person.
You fill the form, then they register you.
Okay.
They will not ask you of anything.
Okay.
And that's why they are registered the Business Name Act.
Okay.
But for companies, it's a different ball game altogether.
Oh, okay.
So most people, enterprises, ventures, sole proprietor. So their tax issues are the same as a worker.
Oh, okay.
Or an employee.
Okay.
And it's the same as the Indomie seller you are talking about.
Okay.
And it's the same as me and you sitting here.
Okay.
Once we earn income from anywhere, this is what applies to us.
Okay.
So this is the tax bracket that we fall in. So this 490, it means that out of this your 3,000, 490 you not pay any tax on it. So this 490 no tax, But it's 5%.
Assuming you've made your first profit. Or
don't confuse the profit with the income yet.
Okay.
You see?
What is the difference between as a carpenter or a business owner as a sole proprietor? What is the difference between income and profit?
So the income is the money, the payment that gets to you.
The payments that gets
to you.
Okay.
Or the as your final. So for example, as a carpenter, you want to do some work for someone, the person paid you this 3,000.
Okay.
That is your income.
That's your income.
That is your income.
Okay.
But
it includes both profits and the cost of materials, everything.
That is the cost of materials depending on the way to. So depending on the nature of the business you are rendering.
Okay.
So but we'll come to that aspect.
Okay.
if you have not registered, the key word is registered.
Okay.
As a K Mensa carpentry shop, there's a different arrangement. And then you just go and do your carpenter as K Mensa. Then as I call you, then I pay you. The money I give you is your income.
Yes.
I aside the material cost.
Okay.
You understand that part?
I get.
So your workman, that what we usually call the workmanship, that is your income.
Okay. Okay.
And that's what you are paying the tax on.
Okay. Okay.
But if you are registered as a sole proprietor, as a business, then it means that you are now going to go through the full accounting issues.
Okay.
Of, okay, this is the work you did for this person, you took this. Out of that 3,000, you can now, you took transport to the place, or you bought fuel to enable you run the service.
Okay.
So all the expenses you incurred in running the service, you can now take it from the 3,000.
You take that one out first.
Out, exactly.
Okay.
Because they helped you
in doing the business,
in generating the revenue.
Okay.
You understand?
Okay.
So you take those expenses out. Then what remains is what is called the profit.
Okay.
And then that is the income for the business.
Okay. So that's what we'll calculate a tax on.
We use the personal tax bracket, tax rate to now calculate the tax on.
Okay.
But if it is not registered and you just do it in your, what is the proof that then the amount that you get, that becomes your income.
Income. Oh, okay.
You see the complications?
Yes, there is kind of
dicey thin line. So that's why sometimes
I don't see why the government is not having that interest to go to chase after the small businesses because it's quite dicey.
Yeah.
Yes. So when does the 490 applies?
So we are talking about the income you made as a person.
Okay.
When you went to do the work as a capital, they gave you 3,000 cedis.
Okay.
Is that also?
Yes.
So now let's assume this is all the income you had. So it is on this that you are going to calculate your tax.
Okay.
You understand?
Okay.
And they say that the first 490 you don't pay tax on it. So it means 490 no tax, which is 0.
Okay.
Wait to.
Okay.
Now they say that the next 110 you are going to pay
5%.
5%.
Okay.
So it means that your next 110 of the 3,000, you are paying 5%.
That's tax. 110 Ghana cedis.
Yes.
Okay.
Of the 3,000, you are going to pay 5%. So 110 times 5%. So that's 5.5.
5.5. Okay.
So you see that.
Okay.
You are only paying 5 cedis, 50 pesos.
As tax.
We are not done.
Okay.
If you now, as you are computing, you are summing this side also up.
Oh, okay.
So 490 plus 110 will give you how much?
490
plus 110
plus 110. That's 600.
Okay, so now you are at 600 there.
Yes.
Okay. Take note of this 600.
Okay.
Then we say next 130 is 10%.
10%.
So which means that this 130 out of this 3,000, if you take the 600, how much is left?
24.
So which means that this 130 is still within the 2,400. Is that also?
Yes.
So 130, the rate is 10%.
130 times
10%.
Times 10%.
You get what?
13.
13 cedis.
Yes. Oh, okay.
Now add the 130 to this 600, get 730.
Yes.
What remains out of the 3,000? It means that what remains?
730. Along with 2,270.
Very good. So that 2,270 is the next one is what? 3,166.
Yes.
Which means that it is more than this, but less than this.
Okay.
So it falls within the 17.5.
It falls within.
So the next tax bracket is the 17.5.
17.5.
Yes.
Which is around the margin of 3,166.
So
Oh,
how much remains now?
So you have to Multiply that
No,
one.
so the 3,000 minus your 730. How much did we get?
That's 2,270. 270 Ghana cedis.
So this one, we are going to tax this at the next bracket, 17.5%. So 17.5% of that is how much?
17.5 times 2% times 2270. That's 397. 397.25.
Okay. So you see that this is the remainder of the income, this is the tax rate that applies to it. Now you are interested in how much tax you are going to pay.
So
is that also?
Why don't they make it straight and you have to pass through this?
So there's a reason. The reason is that not everybody earns the same.
The same. So assuming your
the more with this, you realize the more you earn, the more you pay. So you see that this our person once is ended at 2,270. All the tax you will pay is what? 5 addis.
That is
5.5. 0 plus 5.5.
5.5 plus
13. So 5.5 plus 13.
Plus 13 plus
397.25.
That's about 415.
So 415.75. 75.
Yes, Ghana cedis.
Exactly. So the 3,000 income, this is the tax he's paying on it.
You are supposed to pay on it.
Exactly.
Oh, okay. So this is the same format that our salary go through.
Exactly. So you see, the more the major point is this one. You see that as the more you earn, the more the rate goes up.
So if somebody's salary
is around
within
16,000.
So even let's say after from 5,000 to 8,000, your tax bracket is 25%.
Exactly. But meanwhile, you're already taking the 316 out at this rate. Exactly.
Oh, okay.
So you see the way we did this one.
Yes.
As you do the 490 at the 0, it is taken out of this.
Okay.
As you do the 110 at 5%, it's taken and then reduced. Then the remaining, that is the limit of your income, which fell within the 17, which exceeded the 10% and then fell in the 17.5 bracket.
Wow. So assuming you
get 100,000. Then you will get to this range.
We'll get to this range.
Exactly.
Which is 35%.
But meanwhile, all these individual ones have been taken out.
They will also be applied
gradually. That's what we call the graduated.
Okay.
And it's made to ease, the more you earn, the more tax you pay. If your earning is small, you don't pay anything. If you are within the 490, the government will now cross.
So all sole proprietor, this is the calculation they have to go through.
Exactly. Because they are personal.
Yes, because they are personal. Okay. Wow, this is a very basic education that we all need to
No, it's very, very basic. But you see, the government, the law is also kind. You understand?
How is it kind?
It is kind. Before, now that you have computed that this is the tax you pay, the law gives you certain provisions.
Okay.
Small gestures, kindness to reduce the amount of tax you have to pay.
Okay.
Like if you are married, they give you a marriage allowance, which is there. I have to check the recent rate. You have marriage allowance.
In terms of running the business or
because you're a person, all this is person. So the person can be an individual person like you,
a sole proprietor,
or a registered sole proprietor.
Oh, okay.
But once your income is calculated and you get this, what applies to you. You understand it now?
I get it. I get to this point.
We haven't gone to the companies. We are talking about the person.
Yes, I understand. So now,
and this is income only from employment too. Probably you had gifts. Okay, the rules are different.
Okay.
But probably you have investment income, other incomes, things. You have to not bring all of them on board. But let's focus on this, the basic.
Basic.
That is, we all know.
Okay. Wow, interesting.
But
we were talking about the flexibility, the cushion.
The cushioning.
Yes, we want the cushion.
So the government also gives you cushioning.
Okay.
If you are married, let me check. If you are married, let me see the rates. I should rather go online, which is faster. Oh, the government, the law is kind. The law
is kind. They say the law is kind.
Don't mind me, I beg you.
Oh my goodness.
No, you see, the thing is, we all pay the taxes. For example, even me, as we speak, I have some taxes I have to
go and file.
This January.
Oh, okay.
And pay. So we all pay. When I did my calculation, because so as a professional, I have to also file my annual income tax. We will get there.
Okay. But if this calculation, if you are an employee, you are safe in a sense that your employer will do this calculation
of course,
employ on your behalf
every month.
But if you are a business owner and you've gone to spend all the money, the income, then you are in trouble at the end of the year.
So that's why you need. You see, I always advise our business people.
Okay.
That's why you need the services of professionals.
Like the chartered accountants.
Exactly.
Okay.
To help you. You see, it is not always that you think about, you pay them, so you want to do everything on your own. Maybe if we have time, we'll look at the compliance also aspect. And you see how the compliance, you see how impactful the compliance is.
Okay.
So you just have to get someone
to be guiding
you.
So not necessarily employing
the person. You can
outsource doing Monday to Friday work for you.
No.
At least once in a month, you look through your books.
As we speak, I have a lot of a number of businesses, sole proprietor business, and friends with companies, who just call you, hey Albert, this is what. These are the issues. What do you say about it? And we'll at least some friends will talk, and then once in a while they also see reason to send you some money, even though you not officially charge them, because we wouldn't say it is for free, except that when it gets to a certain level. For example, when it gets to now do my accounts for me, my filing for me, then you know that now we are going to sit. Look at your books, do computation.
So meaning that even before we even come to that, if you are somebody an individual, and you are even going to a sole proprietor, bookkeeping should be very important for you.
Oh, it's basic. Because all these things we are talking about, GRA, because you have to file your accounts, you need evidence that indeed, if you said you incurred a certain cost, indeed you incurred the cost. So it must be allowed. Because the tax will not allow you anything as an expense. But once you prove that that expense is related to the business or to the income you generated, for which you are paying the tax, then it is allowable. But what is the proof?
So for the individual, I know you don't have a tax booklet that you'll be using, but the sole proprietors, you need to get a VAT book to be recording all.
No, that's when you are registered for VAT. It's a different thing.
As a sole proprietor,
if you're some sole proprietors make a lot of sales now, the law has
and they've not gone to register for VAT.
They have. If you're within the threshold, you have to. But sole proprietor, most of them are not within that threshold. But if you're within the VAT threshold now, by passing the law of last year, now the threshold has even gone to 750,000.
So if your operational capital is within 50,000, you will not pay.
You are missing out the issue.
No, I'm not missing out the issue.
Well, the capital is different from your income.
Your income. Oh, okay.
I'm talking about
If your income is now 50,000, that means that new law is going to exempt you.
You are not talking about your sales.
I'm talking about your income.
Your income. It's not the sales.
It's not the. Oh, okay.
You're confusing them.
No, it's not like I'm confusing them. I believe somebody is also confused just as I am.
Yeah.
So the sales is different.
Exactly.
You can make a sales, let's say even close to 100,000.
1 million, millions.
Millions. But when you take your operational cost, everything, and the profit,
you may not get 100,000.
You may not get the 100,000.
Exactly.
So that means you are even exempted.
No, the VAT rules are different. What we are talking about the direct income tax, not anything VAT.
Not anything. Okay. So now
stick to direct income tax.
Charlie, the thing is confusing on my brain.
So just stick to direct income tax.
Okay, so after running your operational cost, everything, you've taken them out.
So then this is the tax you calculate that you have to pay. And that's where we are at the point where we are saying that the law is kind. They give you certain reliefs. We call it tax reliefs.
Okay.
Because you are a person.
Okay.
You see, what we did now is on the personal income tax.
Yes.
So they give you marriage relief. For example, if you are married, they'll give you 1,200 a year.
1,200
to reduce your tax, the tax you have to pay. If you have children, they give you children relief. That is 600 per child for a year. So if you have 3 children, you have 1,080 that the government is also dashing you.
So how does the government knows that I have 3 children as a salary worker? This one, let me speak for the salary worker.
Yeah. So of course, you see, of course, when you are employed, you fill a certain form with your HR, and you listed your children and you update them frequently.
Okay.
So the government sitting may not know, but once you have updated your records in your office, now your office will now have to. I'm not holding brief for anybody or directing anybody.
No. I think this is a very good education.
But your office will not have. There's something we call the relief forms.
Okay.
Master, this one is consultancy.
This, if you want to know much about, is it this for the individual or for?
We are talking about still personal, individual, personal.
So proprietor.
So proprietor is also under personal.
Please, if you need more into details, you have to contact me and we'll provide you this consultancy to know into details. Let's brush it.
So let's brush. So it's for your HR or your company accountant. They will pick certain forms from GRE.
Okay.
What we call the tax relief forms.
Okay. It should be yearly.
Yearly, or maybe it can be updated. It can be yearly. Then they will fill the form. You will fill.
Okay.
You enumerate whether you are married and all those kind of things. Then you submit to the GRE.
Okay.
Then the commissioner or the GRE manager, they will look at it and then they will stamp it. So when they do that, that means now you can be granted these reliefs. So as your organization, as an employee, they are working out your tax things. They can be giving you that reliefs, and to reduce the tax you have to pay.
Wow.
So I'm not that.
So if you fail as an employee to update all these records, they'll just be deducting.
Of course, but you know we are not at the compliance stage yet. But you see,
no, we can be mixing some of them.
Yes. Yeah, but you know, in our earlier discussion, I mentioned that compliance is also part of the tax issues.
Yes.
So compliance means that as a person or an individual or a citizen of Ghana, at the end of every year, you have to file your tax returns.
You have to go and file
your returns. Okay. You can call it tax returns or annual return. They have a form. GRE has a form.
Okay.
You pick the form and then you fill. You indicate all your income from investment, from whatever source. They are there.
Okay.
So you indicate then whether you've paid taxes on it already, you indicate. And then you come out to the tail end. Then that's where these reliefs I'm talking about will now apply.
Oh, okay.
So they will give you the 600 per year for 3 children. Then disability relief in case you have disability of any kind.
Oh, okay.
Body.
Okay.
They have some relief they also give you. That one is how much? That's 25%
of your income.
So you see that one is totally different, not on the tax.
Not on the tax.
But on the overall income, you have that 3,000. Because you have disabled, excuse me to use that, say that you have a 25% reduction before they even compute this.
Oh, okay.
Then we have the old age relief. You know, some people are old, more than 60 years, 60 years of age, but they are doing business. They give them a certain relief of 1,500 a year.
On the disability clause. So that 3,000, the 25%, so that means they'll minus 750 from this 3,000.
Exactly.
Before they will not come and apply
exactly
this.
Exactly.
Oh, then it is the government is good. The government.
You see, but people don't know. But you let's finish. Then the old age relief to 1,500 if you're over 60 years and you are doing some enterprise or you know some are doing school and all those things. They give you 1,500 every year to reduce your tax.
Okay.
Then if you have some age dependent, maybe like you and me, we are taking care of our mothers. They also the law also give us 1,000 cedis per person per year.
Really? So as an employer, I'm supposed to be
entitled to, if provided you file your annual returns. But these ones more of it come in the annual returns filing. But if you pick up
most companies fail to assist the employee in doing this.
Because you said most companies, I wouldn't want to comment on that.
The reason why
you see, we are also in a professional setting. We wouldn't want to talk about what.
No, we are not downplaying
what other professions. Yes. Professionals are also doing their companies.
Yes.
But the approach is what I'm telling you.
Okay, in short, so you yourself don't even know about this.
So that's why you are doing this. You are educating them. So you yourself can even go to GRA, pick up the form, fill it, and then when they start, you present to your organization. And then they have to, and if even they don't, when you are doing your annual returns, you add it, you get all these reliefs.
So in the relief, assuming my company don't want to have a hand in it.
No, don't say don't want to. I want you to use the right words.
Okay,
because probably they are doing it, but you don't know.
No.
That's why.
Okay,
unless
we are doing it and we don't know. But we are not feeling it. One. People are not feeling. I guess you are not feeling it. Good. Because I'm playing the devil advocate here. Assuming you file for all these things, will they refund the money back into your pocket, or going forward, they will minus all these calculations in your next income that counts?
Okay, so when you are filing I keep saying when you are filing your returns and you do all this and there's a negative on your tax return, like let's say now the government owes you, that is you have paid more tax as you should, then you can carry it forward.
You can carry it forward
to the following year in case you get more of your profit and income to offset.
How does that apply to an employee?
So I told you, I just said that employee too, you have to file your annual returns.
You have to file your annual returns.
Usually it is for companies. You see, it's assumed that once you are in employment, you don't earn any other income. So in that case, your company can file the returns on your behalf.
Okay.
But even if they do or they don't, it is your own responsibility by the law as a citizen to every year file, especially those of you working.
Okay.
File your annual returns.
So now let me come to businesses like we content creators. We are not being paid by the government. We are being paid by a third party outside. So even upon all that money that we might be receiving, we have to go and file for.
Exactly, you are getting income. The broad line is you are getting income. So once you are getting that income, content creators, you are getting income. If like you are registered and you can prove all the expenses relating to the income generation, you can also take it out before you have your final.
So like your gadget costs, traveling to this place to come and interview, we take all of them out.
Exactly. And even once you are registered as a business, there are even certain more provisions in the law. Maybe we are not there yet. That this equipment you are using to do this your production to generate the revenue. Government says yes, I know you went to buy it, it costs you some huge money to buy. So that huge money that it costs you to buy, every year, I'm giving you a certain amount of it.
Wow.
So that take that one to out of your tax. We call it capital allowances.
Wow. For a registered sole proprietor.
Exactly.
Then there's a lot that we are missing out of.
Exactly. So for this your equipment, for example, computers I think computer is about 30% or so.
Computers.
So to give you work the computer you bought, okay, we are giving you 30% every year for till it's not permanent too. Till the cost of the computer is finished.
Oh, okay. So the cost of if I bought a computer, let's say 50,000.
Every year take 30%. 30%.
What if along the line the computer spoil and I go and buy another new?
That's a different concept. We call it a pool.
A pool.
It's a different concept. We are not there yet. So if it's spoil and you
I think this tax thing we can't finish today.
No. It's not one day something. So if it's spoil, you buy another one to replace. It's still in the pool.
Wow.
So you keep on. But you have to also notify Jerry that you have bought a new machine to add to the pool. Then they are all part of the compliance. We are not.
No, you see, the way things are going, we need to be adding the compliance to it. Other than that, if we say
so that's why I said that if you want to talk about the compliance, it's a whole also on its own.
On its own.
Exactly.
Wow.
Because this one we just finished with personal income tax.
Do you know what my mind is even telling me?
Tell me.
What my mind is even telling me now is that the individual has got work to do.
Okay.
The GRA also has got a huge work to do. Wow. There's a missing gap here.
Okay.
Because individuals, whether sole proprietor or whether this thing there are a lot that we are not doing. And there's a lot that the GRA is also not doing. So we need more education, I think, on tax.
But that's why I said that your platform is so as we are the educated. And we can continue another. We are only this one is just on the personal income tax.
Okay. So this is just even for the individual.
Exactly.
So
we also mentioned you even have capital allowances to claim. Once your business is registered as a registered business. Once you are registered as a registered business.
Wow. This is interesting. Okay, now let's come to, is there anything to talk about this, the direct people with the individual?
Yeah, so no, I think at this level, I think we'll talk about the reliefs.
Yes.
And then, so that is it. But you see,
but people do not know more about the reliefs. That's where we lack a lot of.
No, so now you have told that it's there. Just go pick the form. You can even download online.
Oh, okay.
You fail. But even if you don't know, you are filing your annual returns. Once it's public knowledge, you can just do your deduction.
So to the individual who do not know how to file for their returns, he is available to assist you, but it will come at a fee, right?
Yep.
Yes.
A small fee.
A small
because of
so when you call and I link you just mentioned my promo code Eyramax, and I think he'll give you a very huge discount.
We'll help you for your taxes.
Yes.
So we'll talk up to this point.
Yes.
So we can clean.
Yes. And go to the company owners.
Let's talk about that. Okay, we can talk about the company owners before we.
There's so much in the tax that many of us do not know.
Exactly. So that's why we also.
I'm even still baffled with the calculation. It's not like I don't understand the calculation, but the graduation.
But that's why we also went to school all these years to learn, to be taught, and pay fees for it.
Before we go to the business owner, why is it so important? What benefits will it inure to the business owner as far as tax is concerned?
If you say business
owner, a lot of business owners are dodging tax.
I know. If you say business owner,
I am saying this because at the end of the day, I believe there's going to be a huge relief, even more compared to
So
to the individual.
Exactly. So you see the business. If you say business owner, don't forget that sole proprietor register is also a business owner.
Okay.
So the benefit of paying your tax is what we explained earlier.
Okay.
For all the goods and services the government is providing for you.
But aside that, the benefits you
get directly,
yes.
You may not get any direct benefit, but it's also good for you when you file your returns and you are tax compliant. You want to get government contracts. You need TCC, tax clearance certificate.
Oh, okay.
Before you get government, and the government is the biggest spender.
Okay.
So if you want government contract from not only the central government, but even from the assembly, from any state institution, you need TCC.
These are requirements you need to get.
Basic. If you don't have TCC, you will not get the contract. They will even take you out.
I think this should be another topic which will treat the requirement as a business. If somebody wants to go into
bid for government contract.
Yes, things that the person need to know and get before. So it will be another
topic. Yeah.
So
the TCC, no problem. I'm always there for you and our viewers.
Okay.
So you need, at least when you are compliant. You see, compliant doesn't mean that you are always paying the tax.
Okay.
It can also mean that you are doing what the law says you should do. Because it is not all years that you make profit for which you have to pay tax. Some years business may go low. If it goes low, you pay no tax.
Okay.
And taxes that has been accumulated on your behalf, for example, we'll talk about withholding tax and those things.
Okay.
You carry it forward. The government allows you to carry forward, and even to carry forward your tax losses. Depending on the nature of business, some 2 years, some 3, up to 5 years. You can carry them
as a business owner.
To offset future big tax that you have to pay when the business is good. So compliance is very, very important. So when you do your tax and become compliant, very, very good.
Okay.
Also, once you are a registered business, this is where I fear for most of our enterprises and our business owners.
Wow.
Including companies and others. Lack of compliance costs a lot.
You pay penalty.
You pay interest, plus the tax itself. Exactly.
You pay penalty, pay interest.
On the penalty, interest on the tax you have not paid. Interest on the penalty. And then, so comply the original tax itself.
Wow.
In case there were tax.
I will call it capital punishment.
In case there were tax to pay. And if there were no tax to pay, when they come and do the assessment and for obvious you have no tax to even pay, the fact that you were non-compliant, the penalties and the interest alone is huge.
Wow. So it's very important.
Very important
to comply.
You miss first day in some of I think you miss first day 500 cedis. First day non-compliance 500. So
now let's come in that first day missing. From 1st to 30th or 31st of every month, whether it falls Saturday, Sunday, weekend, weekday. So this January, let's use this January or let's say December.
Okay.
But today is 2nd.
Yes.
In December, tax that you are supposed to pay. When is the right date to go and pay?
The law allows you up to the 15th day. 15th
of the next month.
So, but I'll confirm, I think 14th or 15th of the next month.
Okay.
But if it falls on a weekend, that means you have to pay it the working day before that weekend. Let me confirm that due date.
Okay. But at least they give you an allowance.
You have
14 days to go and clear the previous month.
Exactly.
So this December, you have from now today to
14th to clear the December 1.
Oh, okay. Then that is good.
Then the VAT for the December 1, you have up to 30th, the 30 days into December.
Oh, okay. That's for the VAT, the indirect people.
The VAT. Let's see the VAT.
The VAT.
I know that's to confuse them. The two.
Oh, okay.
Let me check the due date for.
So as you are checking the due date, do GRA have, apart from the Excel you made mention that have the formulas, is there any app that GRA have that you can be using for easy calculation? Maybe somebody is not ready to.
Oh, no. Well, I don't know. I've not come across one.
Oh, okay.
I've not come across one. So it's 15th. So the 15th, PAYE, and withholding tax is 15th.
15. Oh, okay. Okay.
And then VAT and NHI is 30 days. So
30
this one
days.
lands 31st. So basically that is.
So even upon all these, I think still the government is very flexible as far as.
Yes. But you see, when we start doing the numbers, depending on the nature of business, you realize that you are making. People don't do the numbers, so they think, but people are.
That's the record keeping.
Exactly.
They don't keep the record
At all. It's a major issue.
So, what services? Because I know we have a lot of accounting graduates in the system. What can they do to be helping these individuals?
But it's easy. They are also looking for jobs. They are looking for work.
But this is more work because a lot of
for the employer, it's for the business owners to employ them. If the business owner is not ready to employ them to benefit from their service, but they cannot just get up and come to a business. I want to come and do accounts for you. You understand? So if I advise people, just get one account person, not even at our level, professional level, maybe even SS, to handle your records
for you.
And then with small coaching here and there, like this filing of returns, it can be doing it so that you don't forget.
Okay.
Because when you forget, that's when you miss first day and you are getting into trouble and debt. Then over time, you forget what we have experienced so far. The business owner, they forget. And then it pans out. As we speak, we are not divulging, but we've experienced business owners whose liability, as we speak today,
has been
when they did the assessment for about 2 to 4 years, they are about over 5 million Ghana cedis. 5 million. There is another one. I was my audit boss called me recently, and it was 289,000. When you also comply, you avoid some of these costs and unnecessary expenses.
Okay. So it's good to get these accountants
and become
to be assisting
you. Because the cost the compliance cost that will come eventually can never how much you pay them can never offset that compliance problems.
So what advice will you give? Should they they should do their bookkeeping very well?
Exactly.
Get somebody, if they can't do it themselves, they should get somebody to be assisting them.
Yes.
2, as they do the bookkeeping, should the tax be paid monthly or they should wait till the quarterly or yearly?
Okay, so you are talking
so that it doesn't pile up to avoid
different. There we call them tax handles. There are different taxes and when to pay.
Oh, okay.
So if the PAY, like we mentioned, the personal income tax, the employee one.
Okay.
That one your employer pays for you every month.
Every month.
And the 15th of every month they have to pay.
Okay.
So that's what they do for you.
Okay.
Is that not so?
Okay.
But if you are if you are a sole proprietor also, you have to also now for your workers. For your workers, you have to also do the same for them.
Okay.
Because you've taken the money out of their salaries.
Okay.
Then you have to do it.
Okay.
For them. Then for there's what we call for the sole proprietor also and for other businesses. Now there's what GRA we call the quarterly tax payment. So the quarterly tax payment, beginning of every year, GRA will give you what we call provisional assessment.
Okay.
And in the provisional assessment, they estimate the income that you get and the tax you have to pay on it.
Okay.
Then that one you divide it quarterly. So every quarter, that tax you pay.
Okay.
At the end of every quarter, you pay ahead of the end of the year.
So that means you pay before even the year ends.
Exactly.
So when the year ends, you don't need to.
So when the year ends and now you do your accounts and do your filing, then now what you have paid earlier, you deduct from it.
Oh, okay.
Then what remains,
you go and pay.
Go and pay. Okay. So for example, if the provisional assessment, the taxes on the provisional assessment was, let's say, 2,000 cedis, and at the end of the year, your profit was 3,000. When you now calculate your tax and you have to pay, let's say 2,200 as tax. These are all examples.
Okay.
That means that because you already paid 2,000, what you are left to pay is the 200.
Oh, okay.
And if you made a loss too, it means that what you paid earlier will now carry forward.
So they will give you the room to deduct that calculation next year.
Exactly.
Oh, okay. Okay.
Because now they owe you. The GRA, I'll not even say the government, GRA now owes you.
Oh, okay.
So those are the dynamics of the compliance issue.
Okay.
And then there's another important income tax something handled in there, what we call the withholding taxes.
Okay.
I've seen a lot of businesses go into trouble because of this.
Withholding
tax, WAT.
Okay.
You see, when you render service or goods to someone, you have to withhold their income.
You have to
withhold their income.
Okay.
Part of it.
Okay.
And pay to GRA.
What does that mean?
So withhold means that, that people are supposed to pay their taxes. But some, like most Ghanaians, most businesses, most individuals, they'll take the money and at the end of the year, they will not file their returns or even pay the tax.
Okay.
So in the law, they make provision that when you are paying them for goods, service, or works, you have to take a certain percentage.
Okay.
Hold it.
Okay.
So for example, if you are rendered a service for me, and I'm paying you 1,000 cedis, I have to hold some part of that 1,000.
Which is you, the service provider?
Me.
You, the individual?
Me, the business that has given you the job.
Okay.
So I gave you the job, so I have to pay you money.
Okay.
The money I'm paying, the law says that I should not give you everything.
Oh, okay.
So if I'm to give you 1,000, I'm not to give you the whole 1,000. I should just give you a certain portion of the 1,000. Or I should withhold a certain portion of the 1,000 and pay that money to GRA. That's what we call withholding tax.
So let me break it down. Let's say I am company A, and I'm providing service to company B. So at the end of the cost of providing that business is 1,000 Ghana cedis.
Yes.
Now, for you to pay me that 1,000 Ghana cedis, you calculate tax on that 1,000, right? So there are tax that maybe I'm supposed to pay to GRA. You now withhold that tax. Is that what it means? I will
withhold part
of that tax.
Exactly.
But not all the complete tax.
No.
Why?
Which one is the why? Not all the complete tax, or why I hold part of the tax?
Yes.
Why I hold part of is the law.
Is the law.
The law says that we should hold part of the tax. So that now when you are coming now to pay, that one that we hold, it goes to your credit. That is, it means that we have already paid some of your tax in advance.
That is you, the person receiving my service.
I have taken part of your money by law.
Okay.
And that part of the money I have paid to GRA.
You go and pay to GRA.
Yes, I have to go and pay to GRA.
Okay.
Now GRA will keep it in their books and also in your books.
Okay.
That you have paid part of your tax in advance.
Oh, okay.
So that at the end of the year, when you are computing your tax, that one that the people took small, it becomes part of the taxes you have paid in advance.
Okay.
So it will also be reduced from your overall tax you have to pay for the year.
Then this one there, you need a very good service of the accountant part to do this.
Oh yeah, because that's why I said most businesses they fall foul of this because.
Does this apply to the sole proprietors? Everyone.
Except,
how about the individuals?
Except individuals.
The employees.
No, the employees. So the part of this that the employees pay, the PAYE we talk about, is also a withholding tax.
Okay.
So that's why at the end of the year.
Then this law has.
So that's why at the end of the year, I mentioned earlier that you have to, even as an individual, file your returns. Because when you are filing your returns on your employment income, the PAY you have paid earlier will now be reduced from the overall income you got from other sources to also offset your tax.
Wow, interesting.
So that's what we call the withholding tax. So as people are providing service for you, are paying them, you have to be deducting and paying to GRA.
Okay.
I want to look at the rates. So the rate
for the withholding
is a lot. It's a lot, but the basic ones that concerns us most especially is if you supply goods that is more than 2,000 cedis.
Okay.
Then they will hold withholding tax of 3%.
Wow.
And it's not a final tax. If you do works, that's construction, that is more than 2,000. Works that exceeds 2,000, the withholding tax is 5%. And if you do services exceeding 2,000, or for individuals, that is 7.5%. There are a lot. There are others for expatriates, others for lecturers, others for commissioners, others for directors. There are different rates. But these are the main ones that concerns us as small startup businesses.
So in the compliance, if you fail, what punishment comes to you?
So if the one who has the withholding agent, so I'm the withholding agent. If me that is supposed to withhold, I don't. So you have 5,000. I didn't take the withholding tax. I'm giving you all your 1,000. Now when they come for the assessment, I'm going to pay that withholding. So let's say you did goods, you provided service, and the 1,000, the withholding tax you have to pay is about 75 cedis. Is that not so?
Yeah.
75 cedis. No, are you sure? 1,000 times 7.5%.
1,000
times 7.5%.
7.5%.
That's
75 Ghana cedis.
75. So if I don't withdraw that 75 and go and pay, now when they come for the assessment, I'm now going to pay for that 75.
Not the
person has taken his money and gone. Then after paying that 75, now I'm going to also be penalized for not doing the withholding, because the withholding I'm supposed to submit the returns the 14th day of the following month, and I didn't. So now I've also fallen foul of the law.
Wow.
So the penalties and the interest will start.
Wow, interesting.
The tax rules and the tax is a lot. You see that even now, some I have to go and refer.
Yes.
Because they keep also changing every year. Once they depend on government policies. So once government makes some policy and then they want to implement through the tax system.
Okay.
But once Parliament approves, it brings a lot of change and other changes. Exactly.
So
for example, the VAT now that they make changes, Parliament passed it last year.
Yes.
And from this year,
they are applying it this
exactly.
year. So then we need more education in this area.
Yes.
We need to educate the general public to understand the new implications
of
and the compliance
issues,
the consequences. Wow.
So those are the issues. So the withholding is also very important. Okay. That once you are a registered business and you are paying people, we know that people sometimes will fight you where you are, but that's the law. Like we say, the law is the law. It's the law. If you don't call, if you fail to withhold, then you pay on their behalf. plus interest and other things.
So every business must comply to this.
Exactly.
Every business.
Every business. Once you are paying for service, for goods.
So it's only applied to goods and services.
Goods, services, works. Works is construction.
Like the mason, somebody who is into this building of houses. Wow.
So if you get someone to do, they have to, as you are paying them, you have to withhold tax.
So if I should understand very well, their calculation, they will calculate as in cost of providing you service. The total tax, that is 7.5.
Not the total tax.
No, the particular service they are providing, 7.5 of that service.
And you must withhold.
You
the one paying.
The one paying, you have to withhold it
and pay to GRA.
Exactly. So what if the person is not a registered entity?
But then that one you also have no records of it. The person, you mean the individual, or you the withholding agent?
No, you the service provider.
And then if the service provider...
Okay, let's put it this way, in a simple for people to understand. I have come to clean your office. And the cost of cleaning your office is 10,000 per that month. Now, that 10,000, there's a question there. Does it include the tax calculation on it? Because that 10,000 should be the total sum of including the 7% calculation, right?
No. When you do that, you overshoot your cost. So when I called you that I want you to come and clean the office for me.
Okay.
How much did you say you would charge?
I'll charge you, let's say 10,000.
You charge 10,000?
Yes. Flat.
Yes. Don't forget that I can also go and ask other people for their prices too.
No problem. Yes,
you understand?
Yes.
But you said you charge 10,000.
Yes.
You've come and you've done the work.
Yes.
Now I'm paying you. So when I'm paying you that 10,000, I will take the 7.5% out of it. Let's calculate and see. So that will be 750. That will be 750.
That will be 750. Yes.
So so that 10,000.
So 10,000 times 7.5. That's for goods and services.
For services.
Okay.
7.5 for services.
Okay.
So I'll take the 750. You say 750 out of it. What will remain? It will now left with
so
92,000.
10,250 minus 750. Yes, that's 9,000. No, it's 9,000.
This 10,000 minus 750.
Yes.
10,000.
Yeah,
Okay,
10,000.
So 9,250.
Yes.
So this is what I'll give you.
That's what you're supposed to pay.
I'll give you, and then I'll go and pay this one to GRA. This is for you, Eyra. Then I'll pay this one to GRA.
So whether you are registered, you the person paying, whether you are a registered entity or you are not a registered entity, you still have to take this.
You the person paying must be a registered entity. Not in the individual that you cannot take somebody.
Oh, okay.
But the person who is running the service, whether it's a registered entity or not, you have to take.
Which is me.
Yes.
Whether I'm registered or not registered.
I said I'll have to take.
You have to still take.
Exactly.
But if you are not registered, you are not supposed to take.
Exactly.
You are supposed to pay full. But at the end of the year, I need to, when I'm filing for returns, I have to now go and pay.
Now, when you are filing, you asking who?
As an individual.
So when you are individual, you are now filing your returns. You can now claim this as part of the taxes you've paid already.
Oh, okay. Okay. The withholding thing is very complex, and
that's why the tax laws are very complex and complicated. You know, because of the time we are packing a lot. Yes. But if we have to go deep, but maybe in future sessions we can take we can take them in isolations.
Okay.
And treat them fully.
I think let's give them the opportunity where in the tax sections that you do not understand, you can leave it in the comment section, and if you want us to treat it specially for you, we will take it topic by topic. But this is quite confusing. So if you deduct and you don't go and pay as a registered entity, they will punish you.
Sure. Don't say punish. You fail to comply.
You fail. That is when you fail to comply. That's when you penalize you.
Exactly.
So whether registered or not registered entity, you need to understand and keep a record of this and file at the end of the year that the people that you provide service for. Then bookkeeping is very important.
It's basic.
It's basic, but we are not doing it.
We've talked about that already. You know, most businesses and most people think that they can manage their books, but it's not like that. It's not like that. Some even just do bank-to-bank transactions, and if you ask them to bring their books, then they'll bring you their bank statement. It's not your books. I cannot infer the movement in your bank account, what those transactions are for.
Okay, to draw the curtain on this topic, when we say the book, what goes into the book?
Oh, okay. So when we say the book, by law,
okay,
every business has to keep at least 3 basic books. I need to confirm.
Okay.
One is your purchases book.
Purchases book.
One is your sales book.
Okay, sales.
And then your cash book.
Cash book.
Then if you want to add more, so basically these are the basic 3 every business should have.
So purchasing that when you are going to buy
them items, where you buy the items.
Okay.
And then your
sales. Okay.
Who you are selling to and all those things.
Okay.
And then your cash book.
What goes into the cash book?
That is used to record your payments and your receipts. So the money you are paying out and the money people are also giving you. That's the cash book.
Oh, okay.
At least you are able to keep these 3 basic ones.
It's okay.
It's okay. The rest, maybe when we come, we will look at, okay, did you bought machines? Maybe you have your book also that you record the equipment that you have.
Okay.
And then probably also, we mentioned your sales, your cash book, and then your purchases book. Basically, then also probably your payroll. If you have people you are paying.
Okay.
They are very important, exactly.
Wow.
That's records.
I think my viewers, we cannot exhaust this topic in one day. I think what we've done so far is okay. If you have any question or there's any part of the tax that you do not understand, please kindly leave it in the comment section. This will be based on request, because I think I have to go and come back again to really
dive
down into details. And we'll be helping businesses this year. As far as your bookkeeping is concerned, we'll do some practical. So if you need a consultancy, a quick one before you go, what are some of the accounting services you can provide? So that anybody who needs it will contact me and I'll link.
I belong to Kechi Accounting Services. Kechi Accounting Services.
Okay.
So we do audit.
Okay. We
do tax.
Okay.
And then we do accounting as well.
Okay.
So depending on the service you want us to render for you, we are available for a conversation.
Okay.
We also do management consultancy. So business planning and all those issues around business. Yeah, we are there.
Okay. The last question is there a way you can avoid tax?
This is a very difficult question.
As an individual, then as a business owner, can you avoid?
This is a very difficult. Then better you don't do anything.
You start idle.
Yeah, you just. But when we did the personal income computation, you saw 490 no tax.
Yes.
And so you just make sure that your income is just 490. And then that one, nobody worries you.
But as long as you exceed that threshold,
you should see that threshold there. You have to. But you have to be enjoying everything. You see, so people usually ask that. You know, you can the tax law, like we just mentioned, about the reliefs, the capital allowances. It make, we also have even tax holidays.
Tax holidays?
Oh, yes.
Wow.
Depending on the type of business you are doing, you have some holidays, they grant you, some are even up to 10 years, some 5 years, some 2 years, you don't pay tax until that time reaches. You also have, depending on where your business is located, your tax rates also come down. So there are so many provisions in the tax law that gives you the opportunity to take advantage of those provisions to minimize or reduce your tax payment to the barest minimum. Even if you employ new graduates, there's also a certain relief for you.
Oh, really?
Oh, yes. It is in the law. I wanted to. There's certain relief you employ young graduate is there.
Wow.
But you need someone who knows all these things. Then we can apply it to your business to minimize. But to totally say you are doing business and you want to find ways and means, as soon as you cross into illegality, it becomes tax evasion and they get you.
Yeah, you'll be in trouble.
So usually I don't even want to talk about ways and means to
dodge
that. No. Just let's go by because I've seen, we have worked with businesses who go by the law. And so will not pay tax for as long as 5 years, 10 years.
Really?
They are not paying tax. It's not like they are
avoiding it.
It's not like they are refusing to pay. But the provisions of the law.
So they study the tax.
They have experts, tax experts
who have studied the tax,
yes.
And they are complying. And over the years, because of the relief, now they are no more even paying tax.
They will have tax to pay. But because of the relief, the allowances, and some other tax planning, detailed tax planning issues that goes in, the tax is to the barest minimum.
So this year, this is what we need to do. We need to go into the tax aspect. So there will be another content that will be bringing another section where we need to bring out some of these compliances. Let's go more into the compliances so that we help business owners to pay the barest minimum so that the business, those money can be retained in the business to grow the business. So thank you very much, our followers. If you have any questions, like I said, leave it in the comment section. And if this is your first time of coming to our channel, please kindly subscribe so that we can bring you more content like this. And if you want to support us financially in buying equipment, traveling to other places to interview the resource people, please, my number is 0244 20 20 71. 0244 20 20 71.
So what I wanted to say is that for our viewers, please know that the tax laws are evolving. So even some of the presentations I made today,
they can change. Oh,
so rapid. So maybe if you are watching at another date, and some of the things I mentioned are not applicable, know that it has changed. But they do change. Frequently. Yes.
Oh, So it is the duty of your accountant and you, the business owner, to be abreast with tax.
The current tax. Exactly. So I want to sound this disclaimer before someone says that we've put out wrong information, blah blah blah.
So I think I have to put this disclaimer
also
first before they start watching.
Exactly. And also they shouldn't take any decision based on what we said. It's a disclaimer.
Yes.
If you want professional advice for taking decision, they should contact you. Then we sit and talk on that one.
So like I said, if you need consultancy services as far as tax is concerned, please let us know. We provide you those services before professionally. This is education, more of an education and information we are passing out there for business and individuals to know about tax. So if you really want to apply it, please consult a professional to assist you in your dealings. Yes. So thank you very much.
Thank you. I'm honored to be on your show.
This is great. It's been like 2 years.
Yes.
But finally, he has come to the show. So we thank you very much. So see you in our next episode.
Thank you.
Bye-bye.